My name is Bijal Shah, Marketing and Trade Show Executive here at Jade Global. Let me go ahead and start off by introducing today's session using Subledger Accounting for automatic account generation. I would like to introduce Daisy Devandan. She is one of our senior consulting managers here at Jade Global, and I've gone ahead and listed her contact details. Daisy.Devandan at jadeglobal.com. And again, I am Bijal Shah, Marketing and Trade Show Executive, and also your moderator for today's webinar. I'm going to go ahead and pass it on to Daisy.
All right, for today's agenda, I will discuss briefly some of the Subledger accounting concepts that are relevant to our case study, which will also include the key components of SLA. We will then proceed with the case study, how we went through the design process, and how we implemented the solution. Then we will proceed with the Q&A session. Let's start with the Subledger accounting concepts. So first off, what is Subledger Accounting, or SLA? It is a centralized repository for accounting entries. Keep in mind that it is not a separate application and there is no separate responsibility that will cover all Subledger applications. It is also used during account drill down. As a standard functionality, EBS comes with seeded SLA components that can generally handle the standard accrual, cash accounting, U.S. federal, and encumbrance accounting. And also there's another accounting convention for China. However, as SLA is a rules-based accounting engine, it can be configured. It can support multiple accounting conventions even for a single business event. How does this work? SLA comes with the same set of forms that are available from each standard Oracle responsibility. Meaning, when you are logged in using a payables responsibility, you can only access the SLA setups for payables. So I guess that's how Oracle has defined it. Okay, the next slide shows the ledger setup through the Accounting Setup Manager, where accounting convention or Subledger accounting method is assigned. So you will see at the bottom that the Subledger accounting method is a standard accrual. And the Subledger accounting method owner is Oracle. So once you've configured your SLA, you will see that the Subledger accounting method owner will be user when you actually assign it to the Subledger accounting method field. So remember this. This is a setup that is very important, and we'll go over that again when we go to the rest of the slides. The next slide shows the Subledger Accounting Program Report. This report comes when you run the Create Accounting Program from the individual subledgers. As you can see, this report shows a report summary at the very top, which summarizes the event classes of the transactions that got processed or in error, if any. This is also the report where you will see the specific journal entries created, including the details for each, which will help you pinpoint a specific transaction which you want to review, especially if the transaction failed. This is a very important report, especially if you have configured SLA. You may run this report in draft or final mode. When configuring SLA, I suggest running the Create Accounting Program in draft mode so you can review and make changes to your SLA configuration if required. Now let's talk about the key components of SLA. So you have three major components, which is the Subledger Accounting Method, which is we'll call it SLAM. Application Accounting Definition, AAD, Journal Line Definition, which is JLD. All right, let's talk about the first component, which is the Subledger Accounting Method. Again, as you have seen earlier in one of the slides, this is the component that is assigned to the ledger. This, the screenshot, as you can see, is an example of a seeded Subledger accounting method, which is the standard accrual. As you can see, it contains the different applications or modules with the corresponding application accounting definition, which can either be seeded or custom. If you remember, I mentioned that SLA, you can only access SLA for specific application where you are in that specific responsibility. So if you're logging using cost management responsibility and you go to payables application, the button at the very bottom, which is application accounting definition, will be grayed out. Okay, just keep that in mind. The next one is application accounting definition. This contains the different event class, event types, and the journal line definition assignment. Examples of event class are accrual, write-off, direct inventory receipts, or direct inter-org receipts, invoices, payments. The event classes vary by application, so they're not the same. Examples of event type are invoice validated, payment created, return to vendor, and COGS recognition. Here, you will not see the specific event type because event type shows all. But you will see it as we go along to the other slides. Sometimes, keep in mind sometimes that the event class has the same value as the event type. At the bottom of the screenshot, you will see the journal line definition assignment. The next key component of SLA is the journal line definition. This contains the journal line types, journal line description, journal line type assignment, and the account derivation rules. Examples of journal line type are accrual, liability, inventory, valuation, discount. In the screenshot, examples are cost, variance, inter-org, and freight charges. Now this slide contains the subcomponents that complete the SLA configuration. I will show the screenshots of this when we go to the copy and modify section. The journal line type consists of conditions that are configurable. The seeded journal line types already comes with seeded conditions. You can add to the existing conditions as per your requirement. The journal entry description, or Jade, consists of additional information at your journal entry header or journal line. The next one is the account derivation rule. It defines the source or the mapping set and how you would want to derive accounting for each segment of the accounting flex field. The last is actually it's a specific task or a setup that completes the whole configuration, which is the assignment of Subledger accounting method to the ledgers, which is the screenshot that I showed you earlier. Now let's talk about when you can leverage SLA standard functionality through standard configuration. So when do you need to configure SLA? First, when the seeded rules in SLA do not support your accounting generation requirements for a single segment or a combination of segments in the chart of accounts, then you can consider considering SLA, just like our solution in our case study. Another instance is when you want the system to do a different accounting treatment for a specific event class or event type. Another major reason is when you want Oracle to handle differences between corporate and local accounting requirements. Okay, now let's proceed to our case study, and we will talk about the project background. So, ABC company would like to reduce, if not eliminate all customizations in 11i as part of its initiative to be on the latest R12 version. So AB company has multiple ledgers in different countries. The US ledger has multiple balancing segment values or company codes in the same legal entity or ledger. And IE, which is Ireland ledger, Ireland, has only one balancing segment value assigned to the legal entity or ledger. The accounting flex field consists of the following segments: entity, line of business, department, account, project, intercompany, feature 1, and feature 2. So the implementation team actually reviewed the possibility of using SLA to replace the existing customization. And we identified the customizations and manual processes related to automatic generation of accounts. And also because they do have manual reclassification, we also identified this manual tasks as follows. So for AR, the business rule was to derive entity and line of business from product line accounting. For AP, the manual process was, the custom program actually derives the accounting for product line accounting, derived using product line accounting for discounts, receiving inspection. For cost management, they actually run some custom reports and they analyze incorrect entries and then reclassify manually. So aside from the custom programs that they've done, they also have manual processes in place. So the implementation team came up with a solution to replace those existing customization or processes. So what exactly are the business requirements? The general requirement for AP and cost management is for US, derive the correct entity and line of business from product line accounting. For Ireland, derive the correct line of business from product line accounting. So because Ireland has only one entity, so there was no need to actually configure the entity segment. For receivables, derive the entity segment from the corresponding revenue line. So if the revenue line has two, if the distribution has two revenue lines with different entity segments, then the receivables correspondingly will have also the same entity segment. Because in 11I, it can only derive one balancing segment value. For payables, the requirement was to derive the correct entity and line of business from product line accounting for receiving inspection only. And for discounts, the business requirement was to derive the correct entity and line of business from PO charge account if invoice has a PO, and derived from invoice distribution if invoice is entered manually. Now, the complicated requirement was in cost management. The requirement was configure all events except for miscellaneous event class with these exceptions. So for the miscellaneous event class, the journal line type inventory, valuation, and journal line type offset have a specific accounting derivation rule. So the journal line type, for the journal line type inventory valuation for US, derive entity and line of business segments from product line account, product line accounting, or product line material account for all event types. For IE, the same as US except derive line of business segment only, which is part of our part of the general requirement. For journal line type offset, derive entity and line of business using product line accounting only for specific event types. So these are account A-list receipts, account A-list issues, cycle count adjustments, physical inventory adjustments. So that makes the configuration a little bit more, not a little bit, but it makes it complicated because there are specific event types that are not the same as the general requirement. Let me go over with you our design process. First, we had to identify the event classes that need to be configured. So there's actually a long list because it was a challenge to pinpoint specifically the event classes or event types that need configuration. We created all possible transactions in the development or test instance. Then we run the Subledger Accounting report in draft mode in order to see the event classes and event types that are relevant for configuration. As mentioned earlier, the SLA report shows a summary of the event classes where journal entries are created. The detailed journal entries will show the corresponding event types. This helped us tremendously in identifying the correct SLA component that will require configuration. Then we identified which event classes have the same rules for all event types. Remember that for every event class, you have multiple event types, and the accounting rules may not be the same, which is true in our case study, specifically for the miscellaneous event class. As a guide to our configuration process, we developed an Excel sheet. So I have provided you a snapshot, but actually it's a very long list. So we created a separate tab for each module and identified the SLA components that will require configuration. You will see in the spreadsheet that there's event class, event types, JLP or accounting class, and the seeded source and the sources that will be used, either it's a seeded or custom. We flag the segments by ledger indicating a yes or no for each combination of event class, event type, and JLP. SLA comes with seeded sources, and so product line accounting is one of them. We also identified which requirement would require a custom source, which I will discuss in detail later. Based on the above guide, we came up with a naming convention. This is very, very important. Please note that if you are creating Subledger accounting methods for different ledgers, as in our case study, evaluate if it makes sense to share the same SLA component. If not, be sure to easily identify the SLA component to the correct Subledger accounting method. After the configuration, the next steps are as follows. Validate online or run the Validate Application Accounting Definition program. So this will actually tell you whether or not you have properly configured SLA. Then you run Create Accounting in draft mode to review the journals. So then you can go to every event class and journal entries to make sure that the correct accounting combination were actually generated. And of course, this is very important. You really have to test, and test. So you have to go through every module, every possible transaction that you will have to do and make sure that all event classes are actually covered so that you will be able to see and review if your SLA configurations are correct. Lastly, we use the Export-Import Application Accounting Definition program for the next cycle or for the next iteration. We didn't have to configure SLA manually again. So this is where it is very important that the initial configuration follow a good naming convention so that the program will export and import the SLA components properly. Otherwise, you will end up keying in all the configurations again. You don't want to do that. So, what were the challenges that we have faced? It was not a smooth process of designing and actually coming up with a good solution. So we found out Well, first off, because there was a requirement for configuring cost management, one of the configuration required is for deferred COGS. So the challenge was we cannot change the way deferred COGS account is generated. So SLA configuration is ignored. So at that time, we spoke with the development group, and it was I was told that it was how it was designed. So we will see if they have come up, but I have not really heard about it up to this point. The next challenge was the Subledger report does not have a grand total. So when you run Create Accounting, you can have the option to actually transfer it. So the Treasury Department actually checks the grand total. So it was actually a challenge changing their process of not really, tying up the totals from the Subledger report and the total of the batch that got transferred to GL. Another challenge is to find out which seeded source to choose. So it was very confusing because under purchasing, you have purchase order charge account as a source, and then there's another distribution charge account, which is another seeded source. So it was actually confusing. So you have to actually try both source if your requirement supports that specific source. The other challenge is when you're using export and import process, when you are actually doing the export and import program, export and import AAD program, you have to do it separately by module. So it does not do it at one time. So you have to go to each of the module and export and import separately. So the last challenge we had was the requirements on AR. We actually tried multi-fund accounting, but it only works for manual invoices and not from invoices coming from order management. So the client decided to keep the existing customization. The other option was to actually use a custom source, but it was the client's decision to keep the existing customization. Okay, so now let's talk about how we actually implemented the solution and provide you with some tips and shortcuts. SLA comes with a feature to copy and modify an SLA component. Why do we want to use this functionality? First, it reduces the need to repeat data entry, and there is a lesser chance of committing mistakes. Second, by not modifying a seeded component, it reduces the risk of being overwritten in case of upgrades. Let's start using the word custom components to differentiate it with seeded component as we go to the rest of the slides. It is best practice to assign a custom component only to custom definitions. However, you can assign a seeded component to a custom component. I will show you this when we go over the next slides. When you're doing copy, you have to do it from top to bottom. Start from SLAM, which is Subledger Accounting Method. Next is Application Accounting Definition. Next is Journal Line Definition. Next is Journal Line Type, Journal Entry Description, and then Account Derivation Rule. Keep in mind that while going through this process, when you close the current form, it goes back to the previous form. The last but not the least, by doing this copy function, you will have the ability to design a naming convention to differentiate it with its seeded components. Again, it is very important to design the naming convention properly prior to configuration so that you can effectively use the import-export AAD program. Now let's go through the process of doing the copy and modify functionality. we said that we should start, we should do the copy function from top to bottom. Since the SLAM is the key component that is assigned to the ledger, we should start from here. As you can see, this is the seeded Subledger accounting method, which is standard accrual. It has all the applications that use SLA on the left side. You will see under application. So how do you copy? So click on the copy button and a small window appears where you will enter the values for the new Subledger accounting method. Follow your naming convention. For this illustration, we have put US as a prefix because Ireland, in our case study, had its own set of auto accounting generation rules, and Ireland has its own ledger. Hence, Ireland will have its own Subledger accounting method. Now, here is our custom SLAN. Now, we already create a new application accounting definition for each application where we need to configure SLA. Since I am logged in as using the cost management responsibility when I did the screenshot, you will see that the application accounting definition at the bottom is available. Be sure that you don't click the copy button here on this form, because when you do that, you're actually copying the Subledger accounting method. You have to go to the seeded AAD first for cost management. Okay, so then you will have to click this application accounting definition button. Now you will see that you are in the cost management application accounting definition. Then from here, you can click the copy button, and a small window appears where you will enter the values for the custom AAD. Follow your naming convention. Here you will see that we have put the company initials, country code, and then the application name or code. Take all the default check marks, including display after copy. This way you will see the same form as above, showing the newly created AAD. When the custom AAD gets created, close the form and it should go back to the SLAM form. Make sure you end date the seeded AAD assignment. And then insert the same application, which is cost management in this case, and assign the custom AAD. So you will see that under name, you will see AB underscore US underscore cost management. And then click the application accounting definition button to proceed. Here you will see from the custom AAD, go to the event class and the JLD that you want to copy. So in this case, we want to copy the event class direct into or proceed. So we are now in the JLD form. Here you will see the different journal line types associated to the event class. So our event class here is direct inter or proceed. Now click the copy definition button. It will show you a small window where you will enter the values for your custom JLD. Follow your naming convention again. Here we have used company initials, country code, and the same event definition code, just like the seeded code. When the custom JLD gets created, close the form and it should go back to the application accounting definition form. Go to the journal line definition assignment. Delete the seeded JLD assignment and add the custom JLD. And then click on the journal line definition to proceed. Now we are in the journal line definition form where you see the custom JLD. Here you will see the seeded journal line types on the left side. Go to the journal line type that you want to copy and then click the line type button. Remember not to copy from the form. You have to go to the line type definition first. Be sure that you have the correct, be sure that you're copying the seeded JLP with the correct event class. Remember this, in cost management, inventory valuation is used in most event class. So check very, very carefully. Use the arrow up, down keys to go to the correct journal line type. Then click on the copy button. A small window will appear where you will enter the values for your custom JLP. Follow your naming convention here. Here we have used the same naming convention for the other components. Company initials, country code, and then line type code. From the custom JLP, you can also put conditions if required. Click on the Conditions button. As you can see, sequence here is actually a seeded condition. You can add additional conditions as required. Make sure you indicate end at the last column if you're adding another condition. And then save and close the forms until the screen goes back to the JLD form. Now you are back in the JLD form. Go to the journal line type assignment. Inactivate the seeded journal line type, inventory valuation here. So on the active box, disable that. And then assign the custom journal line type. Choose to define journal entry description or create an account derivation rule. So here's just an example of a journal entry description, which you can associate to your journal line type. Now let's talk briefly about the seeded and custom sources before we proceed to the account derivation rule. The seeded sources are used when creating account derivation rules and conditions. It is important to review and identify the seeded sources that can satisfy your requirements. I've shown you the navigation path where to go. So you go to source assignment form and review the possible sources that you can use. If seeded sources would not meet your requirement, Oracle has provided a custom source form to capture new sources. But the key thing here is, before you can actually define it, you have to create a PL/SQL function name, or create a PL/SQL function and associate it with the PL/SQL function name field. Now, let's proceed with the account derivation rule. You still have the option to copy, but in our case study, since the requirements are straightforward for specific segments, there was no need to use the copy function. So this is the form where the account derivation rules are defined. The output type choices are like field, segment, or value set. in our case study, the rule will pertain to specific segments, so we have used segment. For this example, we have used a seeded source called product line accounting category, material overhead. This supports the requirements in our case study. Here is an example of an account derivation rule with a custom source. Since we face some challenges in the deferred COGS account, we have to create a custom function that will be used to derive the correct deferred COGS account. So as you can see, the value type is source for priority 10, and the value actually is the custom source that we have created. So going back to the JLD form, because we need to assign the account derivation rule, go to the custom JLT, which is the U.S. inventory evaluation, and assign the account derivation rule. So rule of thumb is, for the first row, use the seeded ADR to catch all segments. So meaning you will use the seeded account derivation rule for all, and then you can specify the specific segments where you have a custom account derivation rule. So in this case, the company segment was added using the account derivation rule, AB company segment PLA. The other important step we did was to use the Export-Import Application Accounting Definition program. What does it do? It is an excellent way to copy SLA definitions from one instance to another. There is no need to redefine all the setups, which really saves a lot of time. Some manual steps are still required to complete the SLA definitions, but using the Export-Import AAD program will definitely save you a lot of time and minimize potential errors due to wrong entries. So it is very important that you design and configure following a good naming convention from the source instance. Ensure that patch 102.76.169 is applied so that SLA components will be imported completely. To use the Export-Import AAD functionality, follow these steps. So from our case study, since we created a custom source, we had to do it. We had to define it as a first step. So again, as a prerequisite, before you can create a custom source, you have to create a custom function. The next step is to run the Export Application Accounting definition from the source instance. The third step is run the Import Application Accounting definition program from the destination instance. And then you verify the SLA definitions if they've come through. Check the Subledger Accounting method, the accounting application definition, journal line definition, and so on and so forth. Check the account derivation rules with custom sources if they are assigned correctly. Make sure that they are there. The next step is update the custom Subledger accounting method with the seeded application and the corresponding AAD assignments. So the bad thing is that the import process will only include the custom AAD. So it does not come with the seeded application. So you have to manually add the rest of the seeded application as shown in the standard Subledger accounting method. This way, modules that will be implemented in the future are covered at least with the standard ADRs. The next step is to validate online. Or you can run the Validate Application Accounting Definition program. Either way will work. And the last step is to assign the custom Subledger accounting method to the appropriate ledger. So how do you run the Export-Import Application Accounting Definitions program? So as I have mentioned, you have to run the program for each relevant application. You have to do it by application. The export and import programs will do it per module only. So if you need to configure SLA for 3 modules, run the program 3 times. Use a different file name for each run. So from the source instance, this is the program that you will have to run. You'll have to run the export application accounting definitions. So you have all these parameters. So just follow that. Now, if your output says use leapfrog, if your output is showing warning error 0, then you should use leapfrog on versioning mode parameter. Okay. From the destination instance, you'll have to run the import application accounting definition programs. So here are the parameters: ABM context, destination file name, merge analysis, no, import option, merge, validate yes. If the report says you need to overwrite, use the parameters below.